In today's video, we're going deep into the likely impact of Trump's presidency on the US and global stock markets, specifically in the short, medium, and long term. Part 1, the immediate shock. Short-term impact on the markets. So, let's start with the short-term outlook. Historically, Trump's election resulted in a unique market phenomenon, with his influence driving rapid spikes and dips. Back in 2016, his victory initially spooked the markets.
Fake news.
With the Dow Jones futures plunging 800 points overnight. However, within days, a wave of optimism swept across Wall Street.
Tax cuts for American families.
Investors quickly adjusted to the promise of pro-business policies, with sectors like energy, banking, and defense stocks soaring. The Trump bump, as it was called, saw the S&P 500 raise nearly 6% in his first month in office. Now, on the heels of his 2024 comeback victory, we are seeing a similar phenomenon. The day after the election, the Dow surged 3.5%, the S&P 500 climbed 2.53%, and the Nasdaq rose 2.95%, each index closing at record highs. This rapid rise reflects investor enthusiasm for Trump's business-friendly promises like tax cuts and deregulation, which many expect to boost corporate profits. Additionally, the rally was powered by Trump's trades, investments that benefit from Trump's policies such as energy and defense stocks. But the market rally didn't just stop at stock. The yield on the 10-year US Treasury note jumped to 4.479%, a 4-month high, as investors priced in the inflation risks that could arise from Trump's proposed fiscal policies. High yields indicate that investors are expecting stronger economic growth, but they also signal potential inflationary pressures. Bitcoin equally reached a record-breaking high as investors sought to hedge against inflation and dollar fluctuations. In addition to Trump's supposedly pro stance on crypto, making all those crypto bros happy, one thing we should expect is short-term volatility in global markets. Trump's America-first approach in his prior term led to strained international relationships. Trump imposed tariffs on over $300 billion worth of Chinese goods, sparking a trade war that sent global markets into chaos. Between 2018 and 2019, the MSCI World Index, which tracks stock markets worldwide, saw an increased volatility with multiple correlations directly related to the US and China tensions. If he does resume this hard stance against China, we might see heightened volatility once again. We have seen some large banks such as HSBC restructuring to be able to continue operations should a west and east divide occur. Emerging markets, particularly those heavily dependent on exports to the US, could face a rocky start under Trump's leadership. For instance, in 2018, the Chinese stock market lost over 25% of its value due to Trump's tariffs, and the Mexican peso tumbled as trade renegotiations loomed. We might see a repeat of these reactions, with markets in Asia and Latin America showing increased vulnerability to the sudden US policy shifts. Part 2, the midterm effects. The next few years of Trump's presidency. After the initial reaction, markets will likely start adapting to Trump's policies. In his first term, Trump's economic focus revolved around tax cuts, trade renegotiations, and regulatory rollbacks, which spurred US growth. The Tax Cuts and Jobs Act of 2017 was one of his signature moves, which reduced corporation tax from 35% to 21%, boosting corporate profits and contributing to a nearly 30% rise in the S&P 500 from 2017 to 2019. If Trump pursues further tax cuts, corporations could see higher profitability, potentially lifting stock prices up. But there is a catch. With the US debt already at record highs, over $33 trillion as of 2024, more tax cuts could further balloon the deficit, which could lead to long-term economic instability. I've been on various calls with experts this week, both in the political and economic space, and they are predicting that we could see tax cuts significantly quicker this time around. The midterm could also witness intensified scrutiny on multinational corporations. In his previous administration, Trump encouraged companies to bring manufacturing back to the US soil. Companies like Apple and Ford pledged to invest in domestic operations, though with mixed follow-through. Now, Trump might push his agenda even harder this time, potentially leading to penalties on companies that offshore production. Such measures could disrupt supply chains, impacting both tech and consumer good companies that rely on global suppliers. One area where we could see significant medium-term impact is international trade. Might we face a trade war round 2? Trump's trade policies were among the most controversial aspects of his first term. For instance, his tariffs on China led to tariffs being imposed in retaliation from them. This hit American agricultural hard, with soybean exports to China dropping by over 50% in 2018. If Trump resumes these trade tactics, it could spell trouble for American farmers and manufacturers who rely on stable international relationships to thrive. Beyond China, Trump has been critical of other trade alliances such as NAFTA, which he replaced with the USMCA. While the deal did bring some benefits to the auto industry, it also increased costs for companies sourcing materials internationally. If he renegotiates more trade deals, we could see further disruptions across sectors like the automotive and electronics industry, which depend on intricate global supply chains to thrive. Part 3. Long-term impact. The lasting effect on the global economy and markets. Looking into the longer term, Trump's policies could reshape the US economic landscape in profound ways. His tax cuts and spending policies are likely to contribute to increasing national debt, a factor that could weigh on future economic stability for the US. Whilst his previous term's policies were credited with a short-term market boost, they also contributed to rising income inequality and widened the federal deficit. With this in mind, let's consider the possible long-term implications if Trump continues his tax cut agenda. If corporation taxes remain low, it might encourage more companies to reinvest in their businesses, potentially driving up innovation and growth within the US. However, a mounting national debt could lead to inflationary pressures, which would erode consumer purchasing power over time. This could ultimately slow down consumer-driven sectors like retail and housing, as higher interest rates might be needed to curb inflation, something that we've seen recently over the last few years. Another aspect to consider is the long-term effect on the US and international relations. Trump's America's First policy might lead to a stronger dollar in the short term due to foreign capital inflows. However, a strong dollar can negatively impact US exports, making American goods more expensive abroad. This would ultimately hurt US manufacturers and could lead to a trade imbalance over time, resulting in a weaker dollar in the long run. Moreover, if Trump does alienate allies or disrupt alliances, we could see decreased confidence in US financial markets from foreign investors. In his first term, the Trump's administration's stance led to tensions with traditional allies in Europe and Asia. Long term, this could reduce the appeal of US bonds, potentially driving up yields and making borrowing more expensive for the government and corporations alike.